Hi, it's the Tax Geek with more of your taxes oversimplified. Today we look at the effect that the gig economy has on your taxes. Now, the gig economy is nothing new, but only in recent years has it grown to the size it is today, with large corporations embracing this way of doing business. As a result, many more people are turning to the gig economy to either supplement their incomes or as their only source of income, and as such are dealing with the tax consequences of the gig economy for the first time. When you work in the gig economy, you are a self-employed, independent contractor, and as such are responsible for paying both income tax and self-employment tax on your net earnings. However, you also get a couple of tax breaks that apply to most individually owned businesses. The mechanics of preparing the additional forms required of a self-employed person are covered in another video, and you might want to see that video first. There should be a card above or a link in the description below. So how do you make sense of the paperwork the company sends you at the end of the year? And where do all these figures go on your tax return? To illustrate this, we're going to bring in Joe, who worked part-time for the Easy Ride service. At the end of the year, Joe receives 3 documents from Easy Ride: a 1099-K form, a 1099 NEC form, and a summary sheet listing her total earnings, the number of trips she made, the number of miles she drove, and the fees that Easy Ride deducted from her earnings. The 1099-K shows, month by month, the amounts that her passengers paid her. This is before any fees are deducted from her earnings. The 1099 NEC shows how much money Joe was paid by Easy Ride itself, possibly for a signing bonus or as extra pay for lengthy or difficult trips. The amounts on both the 1099-K and the 1099 NEC are reported to the IRS and must be accounted for somewhere on Joe's tax return. Finally, the summary sheet gives valuable information allowing Joe to compute the expenses associated with her work and use them to reduce the amount of income subject to both income tax and self-employment tax. Joe starts by preparing a Schedule C, which she will attach to her tax return. First, she will provide some basic information about the nature of her business. The business type code for ride sharing is 485300, Taxi and Limousine Services. She uses the cash method of accounting, and she materially participated in her business. She started the business in the current year, and she did not have any subcontractors, so line I is checked no. Oh, and by the way, do not put the EIN from the Forms 1099 into the space for the EIN on the Schedule C. Next, she will add the totals from the 1099 forms and put the result on line 1 of Schedule C. The entire amount must be reported. Do not net out the expenses and fees. They are reported further down on the form. Joe's primary expenses related to Easy Ride are the costs to use her automobile and the fees that Easy Ride deducted from her earnings. For Joe, there is no need to keep track of all the expenses associated with her automobile. Joe will simply use the mileage on her Easy Ride summary and multiply it by a standard mileage rate, which for 2020 is 57.5 cents per mile. This covers all expenses associated with the automobile, such as gas, repairs, insurance, and wear and tear on the vehicle. The mileage is actually listed on Part 4 of the Schedule C. Joe also has to know 2 other figures: the total number of miles she drove the automobile and the miles she commuted to her full-time job. Since she started driving for Easy Ride in April, she really doesn't have a solid idea of how many miles that was. Luckily, she had her oil changed in January and had her car emissions tested in October, which gave her a pretty good idea of how much she drove in total. However, from this point forward, Joe has resolved to take a picture of her odometer on January 1st of each year to more accurately track the total miles driven in the year. Her commuting mileage is much easier to compute. She simply measures her commute one day, then multiplies that figure by the number of days she worked. These figures are also placed in Part 4 of her Schedule C. Her business mileage is then multiplied by the standard mileage rate and reported on line 9 of the Schedule C. Joe's next step is to add up all the fees on the summary sheet and place the total on line 10 of Schedule C. She then adds all the expenses listed on Schedule C and puts the result on line 28. Finally, she subtracts her expenses from her income to arrive at her net income, which shows up on line 31. The net income amount is used to calculate her self-employment tax, her self-employment tax adjustment, and her qualified business income deduction. You'll find details of these calculations and forms in other videos, which are linked in the description below. So here are the forms Joe has to file for her business. Here is her Schedule C, showing her net business income here. Here on her Schedule SE is her self-employment tax and adjustment for self-employment tax. The adjustment is always 1/2 of the self-employment tax. And here on her Form 8995 is her qualified business income deduction. And here is Joe's 1040. Her net business income is here, her adjustment for self-employment tax is here, her qualified business income deduction is here, and her self-employment tax is here. Of course, this is almost never done manually. The figures from the Easy Ride statements are most often entered into tax preparation software, either by the taxpayer herself or her professional tax preparer. The aim of this video is to show you where all those computer-generated figures come from. And, as always, there are additional details to this process, and links to additional information and forms are given in the video description below. Thanks for watching, and stay tuned for more of Your Taxes Oversimplified.